Hey everyone, Ian King here, back from the metaverse with your weekly market insights video. Today I'm joined once again by my colleague and friend, Steve Fernandez, who also got the wear the blue polo memo this week. We seem to have very similar fashion styles, Steve. How you doing out there?
Doing great. Yeah,
Awesome.
we seem to think about the same thing, I guess, when we put on our clothes. So
that's not always a good thing in investing, but let's talk about the big news this week in Ethereum land. There is this huge upgrade, this fork or hard fork to the network called EIP 1559 that's happened today to Ethereum. Steve, can you please enlighten our viewers exactly what this is? And then we'll talk a little bit more about what it means for Ethereum.
yeah, so Ethereum Improvement Protocol is what you just described in a fancy way. All it is an upgrade to the way that gas fees are determined. So basically, a gas fee is how much a user of the Ethereum network is going to pay to have their transaction verified. So in the past, there was an auction system where you would have users of the network. They would essentially bid in an auction format to determine how quickly their transaction would be processed by the network. So that ended up having some effects where you'd have really aggressive bidding or people that just wanted things processed quickly, and you would see very extreme gas fees at given points. So now with this new update, that gas fee is determined as a base fee where based on the network activity, there's an algorithm that generates a base fee. And now, to try to get that, try to get your transaction processed sooner, you can actually just tip the miner. So that's the first aspect of the update. The second aspect of the update, which the market seems to be pretty excited about, is now instead of when you pay these fees for your transactions, they're now burning that Ethereum. So what that does is that it creates a deflationary effect, or in other words, it's really reducing the supply of Ethereum, which generally results in higher prices. So more than anyone that this could have pretty big effects on Ethereum's adoption.
Absolutely. And, just take a step back for the moment and I want to explain gas fees and how I think people should think about it. Imagine the Ethereum blockchain protocol as sort of like a digital road or a digital piece of infrastructure. And so in like the real world, if you were driving down Interstate 95 and you came to a toll, you know exactly what that toll is going to be. Now, throughout most of Ethereum's life, on the tolls that you paid, you never really knew what the price was going to be. It was always priced as to how congested the network was. But now with this proposal, and specifically to what you're saying, the tolls are going to be known. We're going to know how much the tolls are. And not only that, when you pay the toll to use the network, they actually just burn the token, meaning they take the supply out of the market, which, common or simple economics, if you have a supply that is coming down and demand is staying the same, then the price goes up, right? So there's going to be a demand supply equilibrium, which is why I think we've seen about a 50% rally in Ethereum over the last couple of weeks as excitement for this Ethereum improvement proposal 1559 takes effect. I mean, do you think that's the right way to think about it, Steve?
Absolutely. And I would even take it a step further. I think it not only will demand be held constant, I think it will increase. Now you have new developers and users that are attracted to the Ethereum network because they can, have a better idea of what fees they're paying. In the past, it's hard to scale an application when, you may have a surprise one day where you had to pay a lot in fees, and that can really negatively impact these applications scaling and being really usable by the masses. But now the developers of these applications, they can pinpoint exactly how much they're going to be spending, and that makes it easier to build more robust and even lower fee applications for users. So I think demand will actually increase, and that would potentially help prices even more.
Right. And let me give them like an example of how the fee is going to help out some of these applications that you point out. So take decentralized finance, for instance, right? And this is basically a new era of finance that's built on the blockchain that allows people to transact in two digital items without having any history of each other and having no central intermediary. So think about decentralized finance, like decentralized exchanges are sort of like the New York Stock Exchange, but instead of transacting on the floor of the New York Stock Exchange, I'm trading my cryptocurrencies on a smart contract with another user who might want to buy something and they want to sell it. Now, Ethereum is necessary because you have to pay that little toll to make the transaction happen, to power that smart contract. And in the past, when the markets have gone haywire, if they're either going down a lot or going up a lot, the price of that toll goes up exponentially. And I think, Steve, you have a chart that you might want to share with our viewers now.
Absolutely. Yeah. In this chart, you can see that the gas fees over time, kind of as I described earlier, are just really fluctuating a lot. Mm-hmm. Now, there is normally a period intraday, so during a day, where gas fees will be generally higher. That's around 12 o'clock. But over time, if you look at this chart, there's just huge extremes. And I expect this to be a little tighter, meaning less extremes in the chart from here on out, now that this update has really hit today. Mm-hmm. So should be interesting to see that.
And I can tell you from my own experience, I know some of my subscribers to my crypto newsletter have had the same thing. When the market's going down or it's going up and you want to use a decentralized exchange to get in or out of a position, you could be transacting $1,000 worth of cryptocurrency and the gas fee is like $100. Okay, so you're paying a 10% fee just to do a trade. I mean, that's highway robbery. That's what the New York Stock Exchange used to do to traders like way back in the day. This is not the future of finance. So I love the new proposal, how not only is it going to get supply out of the market, but it's also going to give less price volatility in terms of how much gas fee you pay. But I think the bigger picture here, where we're heading with Ethereum, is the ETH 2.0 roadmap. Okay, so it started last November when they opened up ETH 2.0, where you could actually stake your Ethereum on the network. This is another improvement proposal, which is going to limit the volatility in the gas fees. But the future of Ethereum really is moving from what's called proof of work to proof of stake. And that is going to make Ethereum lightning fast. It's going to handle over 100,000 transactions per second, which is like, 500 times what the network can handle right now. And that is how we're going to get to a world where we can take all of traditional finance and put it on the blockchain, cut out the middlemen, cut out the fees, take the power away from the banks and let people unlock the value of their own assets. And today's move is just one stepping stone along the way. So Steve, are you excited to trade more on decentralized exchanges now that the volatility has been cut down?
Yeah, I mean, it's more predictable, so you can be more opportunistic about when you do trade. And also, if you're actually investing in Ethereum as a token, the Ether token, the proof of stake, the new proof of stake consensus mechanism, which is ETH 2.0, enables holders to earn, staking rewards by holding their token. So, I think that that's a long-term driver for the investment value in Ethereum as well, not even just participating in the network.
Exactly, and it's not just decentralized finance. I mean, we're looking at protocols for decentralized cloud storage, network bandwidth usage. It's all different types of digital applications that are moving to the blockchain. That's why this space is so exciting. One of the best places to invest for the next 10 years. So I think that's it for this week's webinar. I hope you enjoyed what we had to say. If you did, please smash that like button. If you didn't, just don't touch the button either. But you can give us a like too, because it helps us share our content across the web. Any comments, we want to hear from you. Have you ever had to pay huge fees on decentralized exchanges? We'd love to hear from you in the comments. Always please subscribe to our videos. For myself and my colleague, Steve Fernandez, have a great weekend, and we will speak to you again next week. Thank you.